Hi, everyone. My name is Evan Masyr. I'm Executive Vice President and Chief Financial Officer of Salem Media Group, and I'm pleased to be here and glad you're part of this presentation as well. Look forward to spending some time here and talking about Salem Media Group. What presentation, wouldn't be good without a safe harbor statement at the beginning, so there's our quick safe harbor statement that I'm sure you're all reading right away. Some of you may not know much about Salem and who we are, so allow me some time to kind of give a brief intro here. We're America's leading multimedia company, excuse me, specializing in Christian and conservative content. Pretty much all we do focuses on those two audiences. Our history dates back to 1974 when our CEO, Ed Atzinger, put what was the first Christian teaching and talk station, 24/7 station on the air in Oxnard, California in 1974. And from that, he and his brother-in-law, Stuart Epperson, kind of built a number of radio stations together. And then in 1999, Salem Media Group, back then Salem Communications, went public. We reach millions of Christians and conservatives on a daily basis through our various media platforms. And we really have three segments: broadcasting, which is mostly radio, but also some network. We also have a digital media division, and then finally publishing. And I'll obviously spend some time as we go through the presentation, giving a little bit of background as to what we do in each of these segments. Our radio stations, we do have 99 stations across the country, and somewhat unique in the way we program them. And then the digital has, a lot of highly trafficked websites. Again, I'll be touching on those in a bit. But one thing I hear a lot from investors or just other people I talk about when they hear radio, they think, "Wow, isn't radio dead? Isn't it dying?" And I've been with the company. Next month will be 21 years, and in that time period, Arbitron and now Nielsen tracks the number of people that listen to radio on a weekly basis. And in my entire time here, it's either been 92, 93, or 94% of America who listens to radio on a weekly basis. This last year, it was 92%. So still a very widely used medium, despite lots of other, audio and video options out there these days. Salem's the largest commercial Christian radio operator in the United States. We're also the largest news talk broadcaster in the top 25 markets when you count the number of stations that we own in that format. So people probably don't realize the size of Salem in that regard. Our websites focus on those same audience, as I mentioned, Christian and conservative, and we get about 120 million monthly visits, and it's growing steadily. And then on the publishing, we're a publisher of Christian and conservative books. Again, that theme of Christian and conservative audience. So let's talk about kind of relative size of each of the segments. I mentioned radio broadcasting is our largest, 99 stations in 37 markets. And we also have networks that produce content, and it's taken by about 3,200 affiliates across the country. That's 76% of our business comes from radio broadcasting. Now, one thing that gets a little confusing is within radio broadcasting, there are digital components. All of our stations have websites. They all stream, and so there is some digital revenue within broadcast. When I talk about our digital media division or our internet division, I'm really talking about national websites that aren't tied at all to a radio station. Sites like Christianity.com or townhall.com. So again, think of when we talk about digital, it's really our national websites, but there is some digital revenue within the broadcast division as well. Digital is about 16% of total revenue, and then finally publishing is about 7.5% of revenue. We have 3 traditional book imprints and 2 self-publishing imprints. Quick look at our balance sheet here, about $540 million in total assets as of September 30th, which was our last reported numbers. We'll be reporting our December numbers, fourth quarter numbers, probably in early March. Haven't figured out the exact date yet. But a couple things that are worth noting. Last 12 months, free cash flow is just about $5 million or 18 cents a share, giving you a free cash flow yield of just under 12%. We do have a $30 million revolver that's at LIBOR plus 200 basis points. And one other interesting note is that we have 136 million of federal net operating losses as of December 31st of 19, which really means we're not a cash taxpayer of any meaningful amount and won't be for a number of years. We are the third largest broadcaster overall when you look at radio stations in the top 25 markets. We have 58 stations in 21 of the top 25 markets, only behind iHeart and Entercom as far as number of stations in the top 25. And why is the top 25 important? Well, about half of America lives in the top 25 markets. So if you really want to reach people, you want to impact the community and the culture, you really want to be in the large markets. Plus, you tend to have higher asset values, greater revenues, higher margins. So top 25 has been a focus of Salem over the years. Here's a quick map of Salem and where, or of the United States and where Salem is located in the U.S. And you know, as you would imagine, I mentioned top 25 markets, a lot of stations along the East Coast and along the West Coast. We do have some stations in smaller markets like Colorado Springs is market 87. Well, Colorado Springs from a demographic perspective makes a lot of sense. There's a large evangelical community there, plus a lot of our ministries that we do business with are headquartered in Colorado Springs. Little Rock's another one, market 90. Still demographically works well for us. So we'll venture out of the top 50 markets, but typically only in markets that make sense from a demographic perspective. Now, I want to spend a little bit of time on our radio formats because this is what makes Salem unique. We have 3 strategic formats, but one of them is different than most other radio broadcasters. What I mentioned in 1974, Ed put a station on the air that was the first Christian teaching and talk station 24/7. That's all it did. Well, we now have 37 stations in that format, plus 1 station on Sirius XM. For those of you that have that, it's channel 131 called Family Talk there, that we program in this Christian teaching and talk format. And what's unique about that is your typical hour on a Christian teaching and talk station will have 2 25 or 26-minute ministries that are buying time from us. And then the other, call it 10 minutes is available to us for, news, traffic, weather, and advertising time as well. But during the hour then, we're making money while the content is running and also when we're able to run ads outside of the show. So who's buying this time? On weekdays, it tends to be large national nonprofit radio ministries. Weekends tend to be more local churches. Now, why are they buying time? If you think about the national ministries, what they're trying to do is they're really trying to impact the culture, going back again to wanting to be in the larger markets. And, their kind of business model is, the first few years, maybe 3 years that they're in a market, they're paying more to us than they're bringing in the way of donations because they at the end of their program, they all handle it a bit differently. Some will say, hey, we're listener supported, send money to P.O. Box, whatever, in Colorado Springs, or if you like today's message, we have a companion workbook available for a donation of any amount. But the key is to build a donor base. But about after 3 years, they're hitting break even, and then it takes another few years to pay back any investment that they made. So after 6 years, call it, it really becomes an annuity, and people are setting their clocks, kind of appointment listening. They want to listen to, Focus on the Family at 7:30 a.m. and they're tuning in at 7:30 every Monday, Tuesday, Wednesday, Thursday, Friday. And so because of that, you just don't see much in the way of churn. Now, if you look at this slide in the bottom right, you'll see the logos of 10 of the largest ministries that we deal with. We push rates every January 1st with them. Typically, 95+% renew every year. So we don't see, as I mentioned, much churn. Kind of 2 to 3.5% increases. I will tell you, going into 2021, we actually did not raise rates, only for the second time in the history of Salem. You're talking, 46 years of doing this format. When the Great Recession, when we're in the Great Recession back in 2009 and in 2010, we didn't increase rates going out of 2009 into 2010. So we're not increasing rates this year, except for those that already had contractual rate increases. But anyway, we normally push rates every year, and you just don't see much in the way of turnover. These top 10 ministries have been on the air with us for an average of 32 years, whereas you hit a rough economic time like we've been in now. You've got a lot of advertisers that go on hiatus, or perhaps their businesses are even temporarily shut down. We're not seeing that from the ministries, so they stick with their time slot in good times and in even more challenging times. The block programming revenue, that's what we refer to the ministry revenue. That makes up about 49% of our radio revenue, and almost a third of total revenue comes from block programming time. Most of it's on our Christian teaching and talk stations. We do see some of that programming in a couple other formats as well. Now, I spend a little bit more time on that format because I think it's important. It's so unique. There's no one else really doing this format in the large markets. So in most markets, we don't even have any competition. The second main format that we have is contemporary Christian music, branded as the Fish in most markets, not all, but most markets. We have 12 stations, makes up about 17% of our revenue. And that's just like your typical adult contemporary station, right? It's playing music, it's got commercials, ratings are important. Particularly this format goes after women 25-54 as its target demographic. And in Dallas, for example, KLTY is routinely top 5 women 25-54. Just recently was actually #1 in the market. So we make money based on advertising. The difference is that, the lyrics of the songs are a little different. You don't have to worry about what the talent is saying when they come out of a commercial break. So we kind of use the moniker safe for the whole family. The third main format we have is news talk. Think of it as conservative news talk. We have 32 stations. About 19% of our radio revenue comes from these news talk stations. Most of the broadcast day on our news talk stations come from long-form nationally syndicated talent. There'll be some local talent as well, some local shows, but a lot of the day will be national talent, which brings me to our network, which makes up a lot of the content on our news talk stations. Earlier in this presentation, I talked about how we have 3,200 affiliates that take some form of programming from Salem. You'll see Salem Radio Network. You see 7 gentlemen listed across the top. They all do 3-hour programs with the exception of Eric Metaxas, which does a 2-hour program. His program is also geared more towards the Christian audience, whereas the others are conservative news talk. So Hugh Hewitt, Mike Gallagher, Dennis Prager, Charlie Kirk, who we launched in October, Sebastian Gorka, and Larry Elder. They all have 400, approaching 500 affiliates. Those are people who take the show. As I mentioned, Charlie Kirk's a little less. He's got just under 100, but we just recently started syndicating his show. The key is having more affiliates, because a local station can take the Hugh Hewitt show, for example, for free. They're not paying us anything. But we'll get 5 minutes of Hugh's commercial time that we can sell on a national basis that the local station airs. So for us, the more affiliates I can get, the more I can sell the Hugh Hewitt show or the Charlie Kirk show for. So it's really a numbers game about getting more affiliates, and not all affiliates are equal, right? I mean, if you have an affiliate in Des Moines, Iowa, or you're airing Hugh Hewitt in Los Angeles, obviously the more people you can get that you can cover, the higher rate you can charge. But it is about increasing number of affiliates and number of total listeners. In addition to the long form content, we do create 2 news programs. One is SRN News. There's almost 1,600 affiliates that take that, and that's geared more towards Christian radio stations. And then Town Hall News, 800 affiliates take Town Hall, and that's geared more towards non-Christian, just secular radio stations. But at the end of the news program, there'll be, or embedded in the news program, there'll be a spot that we then get to sell. So again, more affiliates you have, the greater I can charge for the commercial time within Town Hall News. And finally, we do have two music networks. One is called Salem Music Network, which is Today's Christian Music, is really the brand name of it, but it's contemporary Christian music, and we have 174 stations that take Today's Christian Music, and then Singing News Radio, which is Southern Gospel. Now, I do have on the slide a metric showing the revenue growth there. Our network has been really doing well, I would say, since about 2016, when Hugh Hewitt was actually the moderator on 4 of the RNC debates, and really kind of our whole platform has risen from that. So been very successful for us, and something we're very pleased with the performance on. Now let me segue over to our national digital division, here labeled the Internet Platform or Digital Media. There's really a few facets there. One is our national Christian websites, sites like crosswalk.com, biblestudytools.com, christianity.com, GodTube. Then we have national conservative websites, Town Hall, Red State, PJ Media, Twitchy. And really the key there on both of these is to drive people from our radio stations to these national websites. So, for example, when we bought Town Hall many years ago, it was getting about 12 million monthly page views. Well, the next month it was getting 25 million monthly page views, because I could just tell people, hey, if you want a full text of what the president said, go to townhall.com. I mean, I wouldn't be surprised if today there's going to be some of our hosts, Dr. Gorka might say, if you want to see a great article about President Biden's inauguration speech, there's a great article on redstate.com. So we'll drive people to our websites that way. In addition to the Christian and conservative websites, within our digital division, we do have a number of e-commerce sites as well, geared mostly towards local churches. So worship house media, children's ministry deals, church staffing, Christian jobs. Again, e-commerce, but geared towards churches. And then really the thing we've been focusing on in the last few years has been, more on mobile apps. More and more people are consuming data and information from their phones rather than their computers. So we've really been acquiring and developing more mobile apps. Last division is our Christian or our publishing division, which prints both Christian and conservative books. There's really two main kind of divisions within the publishing division. One is traditional book publishing, books that you're going to see at Barnes & Noble, at Target, at Costco. We bought a book publisher called Regnery Publishing, and it's been around since the 40s, and it's an iconic conservative book publisher. Actually just hit headlines earlier this week, because you may have seen that Senator Josh Hawley's book was rejected by Simon & Schuster, even though he had a deal with them, and he came to us, and so we'll be publishing his book that comes out May 4th. It's called The Tyranny of Big Tech. In addition to just conservative books, which was, again, what Regnery's focus has been for a number of years, because of our relationships in the Christian community, we've developed an imprint called Salem Books, which is Christian books. We've worked with people like David Limbaugh, wrote a book, The True Jesus. And there are more books. We're actually pretty excited about the lineup we have in the coming year on the Salem Books side. But that's really kind of a hit-driven business. The other aspect of publishing is self-publishing. So Mill City and Zulon Press are the two imprints we have. And the way that works, if you look at the middle icon at the bottom there, is the logo from a book, Walking Across America. A 66-year-old pastor from our area here in Southern California walked across America from Southern California to Times Square and then wrote a book about it. And, the way this works is, he was able to get published. His book's now on Amazon. If someone goes and buys it, literally the printer will print one book and drop ship it. But he wanted to get books to the congregation that he preached at. And so it's a nice little business for us as well. Now, why Salem is different? Obviously, I talked about that format, the Christian teaching and talk. But one thing that I remember, I always think about this when I come to this slide, is when I was a kid, my grandfather would tell me there are two things you don't talk about: religion and politics, because it's how people are ingrained. And what you're going to do is you're going to get into arguments. And what do I do every day? I talk about religion and politics. But if you think about that, it allows us to do cross promotion, I think, better than if we were just focusing on country music. I mentioned how radio hosts can drive people to websites like Town Hall in the example I used. Radio stations, we always do local events. Well, as of a year ago, we used to, and we're looking forward to getting back to doing more events in the future. But, we will do a local event to talk about maybe the political nature. I remember we did events, 100 Days of Obama. But now when we do a local event, we can bring in a Regnery publisher and make it a book signing event, grow the book sales, while also, growing the prominence of our station. We, again, used to do, and we will do again, pastors events where, we'll see 25,000 pastors in a year, where we'll do these free events. There'll be people who will sponsor the event. So as pastors walk in, there are some sponsors there. But then we get the ability to promote some of our websites, including some of the e-commerce sites that pastors and church leaders would be interested in. So there's just a lot of opportunities because we focus on really two tight audiences, the Christian and conservative audience, that we can cross-promote, I think, better than others. And then also on the advertiser side, we can take some of our larger advertisers that advertise on radio and give them some digital opportunities as well with our national websites. So where are we going? What's kind of the focus of Salem? We launched a year or so ago Salem Surround, which is a full-service multimedia advertising agency. It's in all of our radio markets. This past year, because of the pandemic, an opportunity kind of presented itself, and we launched something called Salem Now, which is an on-demand pay-per-view video platform. We've a couple big hits from there were Dennis Prager and Adam Carolla's No Safe Spaces film, and then Uncle Tom, which was a film where Larry Elder was involved. But it's on a pay-per-view basis, and it's done quite well for us this year. More recently, we launched and formed the Salem Podcast Network. The first podcast under that is Dinesh D'Souza. And I heard just the other day that it's one of the top 10 podcasts in America right now, and yet it just launched within the last week or so. On the digital side, our focus continues to be on mobile apps. Between 2015 and 2020, we've acquired 65 mobile apps. We're going to continue to focus on that just because that's where the consumer is heading. And then on publishing, it's really looking and getting highly sought after authors, really focusing also on growing Salem Books, because that imprint is more evergreen. A political book will be a big hit and then it will, die down. You have kind of a backlist when you have a Christian book that has more of an evergreen nature to it. One of the books that we're looking forward to that's coming out this year is a book by Pastor Greg Laurie on Billy Graham. So we're excited about Salem Books and that imprint and the future that has. A couple real quick comments before I turn it over for Q&A. We are the market leader in Christian and conservative media. We've very much focused on transitioning as the advertising market has from, digital to mobile. And then, radio still generates a lot of free cash flow to invest in our growing initiatives and to focus on paying down debt, which I'm sure will be a question when we get to the Q&A part. Quick look at our management team. You can see our two founders, Edward Atzinger and Stuart Epperson. They're both still involved in the business. And then the senior management team, we all have 20 years of experience with the company. And the running joke is we all have a face for radio, and that's why we're not on TV. And with that, I want to hand it over to Michael for questions. I'd love to answer any questions that either Michael have or anyone else that's on the presentation has.
All right, thanks, Evan. I greatly appreciate it. Great presentation. Just a couple of questions. I know in the third quarter, your third quarter results were actually pretty good. You were only down 5%. And if you look at some of your radio peers, some of them even diversified, had radio revenues down double digits at least. So you performed pretty well. Some of that you attributed to your block programming, of course, Salem Surround and Salem Now. So I kind of want to break out those divisions and see if you can add a little bit more color. You indicated that you're not planning on raising rates on your block programming. I kind of wanted to chat with you a little bit about that because I can understand that maybe your local ministries are kind of suffering because there's not any group gatherings and things like that. But are the national ministries having the same issues at this point?
No, not so much. I mean, if you think about, let me rephrase it, there are a few that are, because there are some that will do a lot of marriage conferences or things like that. They clearly aren't able to do those. So they're struggling a little bit more. But, in most cases, the national ministries don't have a local church or a separate, maybe part of a church, but they're separate from the local church. Most of the ministries have actually been quite stable, and some are actually, up this year from conversations we've had with them. If you look at our filings, one of the things we did, which is part of why we want to, keep rates flat, when this pandemic hit and, you were seeing kind of the bottom fall out of everything, we went to some of our larger ministries and talked to them about, hey, pay an advance payment, your May through December airtime. And we gave them a little bit of a discount to do that just to make sure we had adequate cash flow. Turns out we didn't need it. But look, these are our partners. Yes, they're customers, but we refer to them internally as our block programming partners. And we know it's been a tough year just for everybody. The ministries, I'm sure, the individuals at the ministries and the ministries themselves are still, it's just a different world. And so we just felt the prudent thing to do was to keep rates flat going into this year.
And in terms of Salem Surround, can you add a little bit more color around that, maybe some metrics? How many businesses have you served? I mean, it was up, 40%, I think, in revenues in the last quarter, but what is the base? What are you looking for in terms of annual revenue there, and what type of growth rate could you expect, kind of coming out on the backside of the pandemic?
Right. Well, we probably have about 3,000 customers that Salem Surround has been servicing. And some of those are, customers that are already on our radio stations, and then we've brought them onto the Salem Surround platform in addition to radio. Some are just kind of the digital Salem Surround platform. It's, as far as, it grew 40%. I think last year it was in, last year going, go back to 18 was, we're growing in the 50+% range. Hard to quantify where we think it will go. I can just tell you that we think the future is still quite significant with Salem Surround, and it's something we're still investing a lot of time and resource and energy in because we think there's a great opportunity there.
I find of interest your Salem Now as well, your on-demand business. In the way, how is that in terms of, is it a subscription, or is it a donation, or how do you derive the revenues from that? And then secondly, how do you foresee that kind of evolving? Do you see it evolving that the company is going to eventually get into more content, more films, more shows, or something like that? Just kind of give us a little sense of where you think this that opportunity might grow.
Sure. So, Salem Now is strictly a pay-per-view, so it's not a subscription. So if you want to, be able to watch Uncle Tom, you pay a one-time fee, and then you can watch it, as many times as you want. And so a lot of the films are just a one-time fee. It's kind of like a pay-per-view, but you don't have to pay every time you watch it. but there is some free content as well. Part of that is we want some free content to get people onto the platform and then go, oh, hey, that looks interesting, and then go to one of the paid films. We currently don't develop any content other than, like, we've had events where I know one of our events was, I think, that made it on sale now, was Ask a Jew, Ask a Gentile. We recorded that, and then someone can watch it on Salem now. So there are events where we've repurposed, but not anything where we've said, hey, let's go make a movie. So that's not what we're looking to do at this point. But there are some filmmakers who are realizing, especially now, people aren't going to theaters. This is an interesting distribution platform because we're able to come up with a revenue share that makes sense for them and makes sense for us. And so once we got the first 1 or 2 movies under our belt, and based on conversations we've had with people in the industry, it's actually been something that's grown quite nicely. We're in the process of getting an app. Right now it's not an app, but getting an app, getting it on Roku, things like that, to make it easier for people to watch. But we think there's still a decent future there. It'll be interesting to see what happens when movie theaters open fully again. I still think there will be, though, an opportunity for Salem Now to still generate revenue even in that environment.
So we have a couple of questions also coming in asking about the book value. Shows almost $5. They're asking if that's correct, and would like you to explain a little bit about the book value of the company.
Yeah, I think that's probably about right. That's what the math shows. I mean, Michael, this industry better than others. I mean, it's not valued based on book value. They're looking at EBITDA and applying multiples and things like that. And obviously, our industry's been challenged when it comes to multiples recently, as compared to you go back many years ago, it used to have much higher multiples. So that number's right. We look at a stock price at $1.50, $1.60, and we do think we are undervalued, especially given our performance during this pandemic. As you mentioned, Michael, compared to everyone else, they were down 20, 30%. We were down 5%. We grew EBITDA in the third quarter. But we also recognize we're Salem, we're smaller, and it's harder to get noticed.
Yeah, and to that viewer, if you have more questions about that, feel free to send me an email. Another question is about the stock price. I mean, certainly, if you look at the stock price in this, in the last, 20 days or so, the stock is up 60%. And this viewer is asking, okay, why are we seeing it up 60%? I know there's looks like a pretty hefty short interest in the stock. Can you just talk a little bit about the performance there?
Yeah, I mean, I don't know. I can tell you that, I would have said we were certainly undervalued when we were at $1, and still feel that we are. So, to me, it's maybe the market's waking up a little bit to it. But Michael, you've even seen some of this with, kind of started in June with Robinhood. Sometimes we've had crazy volume days. I mean, there was a day in either late June or July where we had 21 million shares traded. And if I take our 2 owners out, Ed and Stu, our 2 founders, we only have 12 million shares outstanding, and yet we traded 21 million shares in a day. So there's some weird market forces that can happen, especially in Robinhood. I will say the stock seems to have moved up a little bit after we announced Salem Podcast Network. I think that people are realizing that we're and we haven't touched much on that, but there will be more names. Dinesh, as I mentioned, was the first one that we're doing podcasting with, but we think there's some opportunities there, and we can be a voice for conservative podcasters. So I'm not sure what's driving it, but we hope and expect it to continue.
And with your podcast, is that going to be operating profitably, or because a large number of radio stations kind of moved into that space and it wasn't profitable right away? So I was just wondering, at what level does your podcast business become profitable?
It will be. And, we've actually been in the podcast business for a number of years, maybe a little differently. So like all of our hosts, Hewitt and Prager, you can get their show delivered to you, in your email box, commercial free, for a monthly fee. So we've been doing that for a lot of years. that you can kind of listen to it on demand, commercial free. Dinesh is going to be a little different. It's going to be more like your traditional podcaster. And as I said, we're going to be adding other, meaningful conservative names in the future. And so we think there's a nice opportunity there.
So we've gotten some questions about, I guess the waves of conservative versus liberalism and whether or not, having a liberal government is actually helpful or hurtful to you. And certainly, we've gone through a pretty traumatic experience here in the last few weeks. Can you just talk a little bit about, has your business been affected by whether or not there's a, more of a liberal bent on the government or conservative bent? Does it matter in terms of your growth opportunities?
I think there's a quote that's been attributed to Rush Limbaugh, and I'm fairly certain he said it, but that, his program does better when there's a Democrat in office because there's just something more to rally against for the listeners, right? So, I look at the fact that, we are now, as of, a couple hours ago, under a new administration. I don't view that as a concern from a revenue or listenership perspective. I think you're going to have people just as interested in politics and public policy as we've had in the past. And I think, if anything, it might be, a little bit more helpful when, our listener is maybe opposed to the administration, or on opposite sides of certain policies. Opposed might not be the right word.
And you went through a lot of expense cuts, and then the question has always been, okay, how much of those expense cuts are permanent? How much is, temporary? Can you just kind of give us a lay of the land in terms of when those expense cuts really started to gain traction and when you're going to cycle against those, and just whether or not we should expect further expense cuts in 2021?
Okay. Great question. So in May of 20 is when we instituted a lot of our pay cuts. That included layoffs. It included across the board salary cuts, and it also included our 401k match, discontinuing the match. So in May of 21, we'll anniversary that. We've mentioned on some of our earnings calls that was about $850,000 a month in savings, all in when I kind of add those three categories together. We have, effective the beginning of this year, restored the pay cuts to our employees, so they're back to what they were making in the early part of 19. So instead of $850,000 a month, you're probably talking more like, half of that, $450 a month in savings, in the first part of the year till we get to May.
We have just a few more minutes here. Let's talk about the debt. The company historically has always managed a little higher level of debt because you had that consistency of that block programming there, and so you were able to support a little bit heavier debt loads. In this environment, what do you think in terms of how are we going to see the debt pare down? What is your debt service looking like, your maturities and so forth? If you could just give everybody an update on the debt leverage and where you might expect it to go in 2021.
Yeah, right now it's in an altitude we wouldn't like it to be at. It's approaching 9, and that's clearly not a place we want to be. We expect that as things start to reopen, more people, getting vaccinated and more people having recovered from the virus, we're going to see economies start to open again, which means advertisers again will start to open their businesses. So how quickly we get to a more normalized, and to me, a more normal numbers, we want to be, below 5. How soon that happens really is somewhat dependent on how soon we can grow EBITDA back to where it was kind of pre-pandemic levels. But debt and leverage is still a focus on us, of ours. Very glad that in 17 we put in a bond deal, so it really has no maintenance covenants, so we're not having to worry about that. Our bonds mature on June 1st of 2024, so we still have some time to get that down, focus on paying down debt and growing EBITDA. We really are working on both the numerator and the denominator of the leverage. But as I said earlier, focus is really to get that below 5, and it's a discussion that happens every executive committee meeting, every board meeting. It's very much on our radar.
And Evan, what are the opportunities for you to accelerate the debt pare down? I know that you still generate, significant amount of free cash flow, but in terms of real estate sales, other asset sales, where are you on those, on that front?
Yeah, look, we continue to look at asset sales. I know Ed's talked about on a couple of earnings calls some opportunities of, real estate sales where we could, maybe relocate our towers, and those are still continuing. I think you'll hear news of those, a couple sales, hopefully in the earlier part or the first half of 21. But these things take time. It's not like selling a radio station. A lot of times have to deal with zoning issues and things like that. But it's things that we're focusing on. And when we get inflows of money like that, our plan is to, quickly pay down debt.
Well, I think we're out of questions and out of time. So with that, Evan, thank you very much for your participation today. It's good to see you again. And hopefully see you in person sometime.
Sounds great. Thanks for putting on this conference and allowing us to participate.
Thank you, Evan.